we think of investing in real estate, we generally think of investing in residential real estate, buying a home. Rarely do we think of investing in a warehouse or investing in a shop. So what's the difference between investing in residential versus investing in commercial real estate? And what sort of benefits does it afford investors? My name is Miloni Bhatt, and today I have with me Kunal Moktan. He is the co-founder and CEO of Propertyshare, which is a tech-powered commercial property listing platform. Kunal, welcome to Economic Times, and we are very excited to speak to you about how commercial property can actually generate income and wealth for investors.
Thank you so much for having me.
So I want to start with the India perspective on it, right? So India, we know, is the world's 5th largest economy, expected to be the 3rd largest by 2029. So tell us about how the commercial real estate sector is performing, given the sort of plethora of opportunities that India right now has for investors. And, what are the kind of opportunities that it affords small investors?
To answer the first part of your question, commercial real estate in India is about a 20-year phenomenon, I would say. I started my career at the Blackstone Group, which is the world's largest real estate fund. And we started India office around 2007, which is when most of the large institutional private equity funds came to the country. And that's when a lot of action, so to speak, happened in the commercial office market in India. Before that, in the 90s, it was mostly some of the big IT companies like Infosys or Wipro who had their own campuses in different parts of the country. But it was only in the early 2000s that a lot of the US multinationals started coming to India, first to start call centers. And then when they realized that Indians were a lot more educated, there was a big population of engineers here, they said, look, this is not the kind of work we should do in India. Let's move that to Philippines, Manila, and all of these other countries, and let's focus more on higher end back office processing and research and development. And then the Microsofts and Apples and Ciscos of the world came to cities like India, cities like Bangalore, Pune, Noida, Gurgaon, and set up these large tech centers. So that's where there was something to buy, and there was a steady stream of leasing and demand that kind of came into the country. So that's the history of commercial real estate. And 2007 to 10, when institutional investors came here, is when a lot of investing happened. So that's something that has continued over the last 10-15 years. More and more US, European multinationals have set up their what they call GCCs, global centers in the big tech hubs of India like Bangalore, Hyderabad, and so on. And today, companies like Cisco, for example, or Goldman Sachs, they have their largest offices outside of their home countries in cities like Bangalore. Huge 700,000, 1.5 million square feet office buildings in big parks where they do a lot of their back office processing at a tenth of the cost in terms of manpower, in terms of rent, and so on. And that's been driving commercial real estate for so many years, and that's why it's been doing so well. And to answer the second part of your question, which is what kind of options do investors have? Till about a few years ago, very few. It was only the institutional investors who were investing in India. And that's also one of the reasons we started PropShare, to make this asset class more accessible to normal, slightly sophisticated investors. And then a big change that happened in the industry was when REIT regulations came in 2014-15, and then the first REIT was allowed to list in 2018, which was also the Blackstone REIT. And now, because of the REITs, there are 3 REITs now in the office space, 1 in the retail space. Any investor can now invest a lakh, even lesser, to own a piece of commercial real estate in India. Other than that, it's directly buy the real estate yourself or invest in some real estate development companies.
Kunal, I have some data with me which says that in 2022, commercial real estate hit 50 million square feet leased. Now, what's driving this trend, and how long do you think it will hold?
So last year, 50 to 55 million, depending on which broker whose report you look at. But that was the second largest leasing in the last 10 years, in a single year that has happened. So fair bit of leasing happened in 2022, but part of it was also because in 20 and 21, there was very little supply and leasing because of the pandemic.
Right.
And there was a bit of kind of pent-up demand that came in 2022. Although India has been absorbing 40 to 50 million square feet every year, a third of which is in Bangalore alone, because that's where most of the large software companies and back office centers are. And this year we will not, I don't think we'll hit 50, but we'll probably hit a little lower. But that's probably, like I said, that was a one-off year. And what's driving that demand is, the same things I spoke about, just more. And in terms of, when the world goes through a recession, which has happened over the last couple of years, high interest rate, high inflation, the pandemic, a lot of banks failing in the US and so on. So what they do then is they try to outsource more to countries like India so that they can reduce their costs even more. And the same thing happened in 2001, in 2008, and today, in 2008-9, in the aftermath of the Lehman crisis, there was a very big recession in the West. And at that time, India did some of its best leasing, because a lot of the banks came to India at that time. Goldman Sachs, Morgan Stanley, Societe Generale, all of these guys came and set up large centers in India to reduce more costs, and that's what's happening even today. And that's the bit that's driving part of the demand, most of the demand. And the other bit is, China has kind of shut down over the last 2-3 years. Some of it because of their own doing. They were very closed during the pandemic. They didn't allow anyone to get in and get out. And lots of companies like Apple, for example, who used to go to China, have now started coming to India. Apple is opening a very large office building in Bangalore. They are now, their main manufacturing unit, which is Foxconn, has shifted a lot of the manufacturing of parts of the iPhone to different cities in India. So that's the other bit that has been driving demand in the commercial real estate market.
Will it hold?
I think it will. I can't say 10 years down the line what's going to happen, but over the next 3 to 5 years at least, I think just as a market we are so small. The entire stock of office space in India is probably 400 or 500 million square feet, which is lesser than only Manhattan. Forget about the rest of the world. Manhattan has more space than that. So we have a long way to go still in terms of where we are and where we can be. And demand, while it will probably not be the same 40 million or 50 million a year, it will be a fairly decent number for at least the next 5 to 10 years, I feel.
All right, 5 to 10 years. I want to touch upon something that I spoke right at the beginning. When people actually think of investing in property, they don't really think of commercial real estate, right? Very often they'll think of residential real estate. So, talk to us about this difference and how can investors actually, make or place their bets in commercial real estate. What should they be looking at?
Coming to the why of it, the reason that's happened in the past is because just the ticket size of commercial real estate has been really high. Anyone can afford a residential a flat or a house, which could cost, let's say, smaller cities 50-60 lakhs, or it could go up in Mumbai to about 10-15 crores. But it's something that people live in, they want to invest in, and you can get a loan from the bank and you can buy it. And it's simple to understand, buying and selling residential real estate. But commercial real estate is slightly more complicated, and therefore it's been the preserve of the institutional investors who are more sophisticated, because you need to look at lease structures, lock-in periods, who the tenant is, whether he spent money in the interiors, how long he's going to stay, what's the market rent, what is the rent he's paying, what are the escalations that come in every year or 3 years, and so on. So it requires a fair degree of understanding of the asset class, which normal retail investors don't have the time or the patience for. So these were the two reasons why kind of people mostly migrated towards investing in residential real estate. And the reason that it's kind of really interesting is because the returns on commercial real estate assets are very, very lucrative for a normal investor. In residential real estate, your yield is probably 2%. That's all you make if you divide your rent by the price that you're paying. But in commercial real estate, that 2% is closer to 8-9%. And on top of that, you also get the underlying appreciation of the property. So you end up making 15-16% returns overall. And this hybrid nature of the instrument, which is saying, okay, you get 8-9% rent, on top of that you get appreciation. That's something you don't have in India. You can either get a fixed deposit, which will give you 6-7%, but no upside. Or you can invest in equities and you could make maybe 10-15% if you're lucky. But there's nothing that gives you 8-9% confirmed known yield plus an appreciation on the property. So that's been a big reason why commercial real estate has been a big hit with retail investors. And with tech platforms like ourselves, we've made that much more affordable now for people to invest in.
Right now we're in a high interest rate regime, right? Things are expensive. And all of that, of course, has a bearing on, people's ability to invest into real estate. how would you suggest investors go about making their decisions wisely in such an environment?
If you look at the current environment, like you rightly pointed out, it's a high inflation, high interest rate environment, and the two go together because during periods of high inflation, the government increases interest rates so that the amount of money supply in the economy goes down, and therefore everything starts going up, from mortgage rates to interest rates on FD and so on. And therefore your opportunity cost of investing, which is, let's say, a 10-year government security yield or a fixed deposit interest rate, which used to be 6.5%, is today 7.5%, 8%. And therefore, when you compare a product like commercial real estate, which also has a yield, you would want some sort of a premium to the risk-free rate because then you'd rather invest in a risk-free bond than invest in commercial real estate. So therefore, prices of commercial real estate also go down when interest rates go up, just like any normal bond or a coupon-bearing instrument. And that's kind of happened over the last year or so, although India has been much better off than the West, where inflation has really shot through the roof compared to India, which has been insulated, so to speak, in terms of that particular phenomenon. But to answer your question, the advice to investors during this time is very simple. If you invest in a high inflation, high interest rate environment in rent yielding assets, you usually end up making very good returns. And the reason is that you are entering at the top of the interest rate cycle, which is the lowest rung of where the prices are in terms of real estate is concerned. So you are buying really cheap, so to kind of put it, and you will most likely sell high because inflation can't remain at 8-9% forever, because that would completely ruin the economy and lead to a housing crisis. At some point of time, inflation does come down, like we've already seen in the US now, and also in Europe and in the UK. And the central governments have now paused the interest rate increases. And at some point of time, they will start bringing it down. And when that happens, the real estate starts picking up again. So today you'll be entering at a very, very good stage in the cycle, and you should be investing in commercial real estate or any other coupon-bearing instrument.
I want to touch upon this issue of sustainability, right? Because it is a really big issue now, not just in India, but globally. India has its own net zero goals, right, that it wants to ensure that it reaches. How is this impacting the world of commercial real estate and this whole demand for green buildings? And how is the commercial real estate sector in India actually stepping up to meet this sort of demand or the evolving needs of businesses?
In the minds of every investment manager, fund manager, real estate developer, because ESG norms today are critical to decision making for multinational investors. They are under a lot of pressure to stick to certain norms. Like you correctly mentioned, a lot of the West has already said that by 2030 or 2035, they will be completely carbon neutral. And you can't even sell fossil fuel cars in the UK, for example, after 2030. India is slightly behind, but that's also understandable given the fact that we are a developing economy and we can't, just do what the other developed economies are doing. But in terms of building, today every tenant, every multinational tenant first asks for your credentials in terms of ESG in the building. Whether it's a platinum LEED building, whether you built it with the right kind of materials, whether you are saving enough energy costs by doing various things, not using fossil fuel as much. So that's something that we have seen in the industry over in the last 2-3 years. And but the good thing about Indian developers and entrepreneurs is that they adapt very quickly as well. So when an Amazon comes and tells them, look, I'm not going to come to a building unless you build it in these specifications, they realize that, look, if I don't do this, then I'm not going to get a tenant for my building. And they kind of slowly then start building according to what the multinationals are saying, which is also how buildings were built. The way BKC is built and the way Nariman Point is built, for example, is completely different, right? And that's how, when banks came to Mumbai, they said, we don't want to be in those old buildings anymore. We want to be in flashy new buildings with like good landscaping and so on. And now this is the next step. So to answer your question, it's very, very important, and it's something that every developer is going to do and every tenant is going to insist on going forward.
This is now my last question to you. Tech has an impact on everything that we do. You have a tech-powered platform. Talk to us a little bit about Propertyshare and what does it do actually for investors, and where do you want to take it, and what's the impact that you've seen with it?
So back in 2015 when we started Propertyshare, my partner and I came and said, look, this is a great asset class. Like I said, we want to give this access to normal people like yourself or anyone else listening to this or watching us. And but how do we do that? And the good thing is, at that point of time, technology had reached a place where people were comfortable buying stuff on their phones. Internet connectivity had improved tremendously in India. We were getting from edge we had gone to 3G and now 4G, so it was faster, and people started trusting more and more, just going online and buying. COVID in that way kind of accelerated the whole process, because then we had no other option but to do that. And just the growth of technology versus any other invention in the past that we've made has been very, very quick. In the last 20 years, the way the chips have developed in phones and the quality of the cameras and so on, it's just that particular thing. We've never seen something like this. So we said, why not we use this as a platform and reach more people and give them access to this product and let them decide whether they want to invest or not. And that's how Propertyshare was born. And obviously it's been fairly good ride so far, very successful. We've done more than 1,400 crores on the platform. We were the first to do it. We are the largest, and we give access to normal investors into rent yielding commercial real estate with multinational tenants. So whether it's a building in BKC which is tenanted by a tier 1 investment bank, or in Parel, which is tenanted to, let's say, an Indian bank or something like that. I mean, we've got all the options. So, and our technology is such that you can do everything on the phone, wherever you are in the world. You don't have to be here. You don't have to come and look at the asset. You can look at everything in the way we used to present to the investment committee in New York. In the same level of detail, you can see institutional level analysis for the normal retail sophisticated investors. So that's something that I think we've brought to the table, which everybody is really appreciated. And then just selling the thing online, through our app, it's just very, very, very easy and intuitive to do. So that's something that's been quite good for us.
So speed and ease.
Yeah.
Kunal, it's been wonderful speaking to you. Thank you very much for bringing us rich insights, into the world of commercial real estate and what it really affords small investors. Thanks very much for your time.
Thanks,
and we wish you all the best.
Thank you.